Good afternoon, and welcome to the first afternoon session of the third day, the LuxFLAG Sustainable Investment Week. I'd like to take a moment just to thank you all for your support during these last difficult months since the tragic passing of LuxFLAG's general manager, Sachin Benkalas. Sachin was a great human being, as many of you know, and a tireless supporter of sustainable finance. He exemplified LuxFLAG with his passion, ambition, and drive to move to a sustainable future. So thank you again. As chairwoman of LuxFLAG, I'm very pleased to see that after 2 editions, the LuxFLAG Sustainable Investment Week has already gained recognition, and that's thanks to LuxFLAG's associate members. They are showcasing this week where they are in the sustainable finance journey. And given that the finance industry is on different stages of that journey, this week is really about sharing best practices so we all advance towards the goal of making all finance sustainable. For this 3rd edition of the LSIW, we thank you for such a positive response with over 3,500 registrations for all of the sessions during the week, which is really amazing. And thanks to our host partners and media partners. The 25 sessions over the week cover the latest trends and most pressing issues in sustainable finance. We hope you find them useful and instructive and inspirational, and show you the progress that is being made and can be made and should be made to harness finance to find solutions to current environmental and social issues. In terms of housekeeping, the slides and the recording of the sessions will be made available to you in a week or so. And please do ask your questions. Please click on the dots at the bottom right of your screen, Q&A, and then we will see about getting your questions answered. So I'm very pleased to introduce this next session, hosted by Danske Invest Management. Danske Invest is one of the biggest and oldest mutual fund companies in the Nordics, and I'm very pleased to introduce today's speaker, Erik Eliasson, Head of Responsible Investment at Danske Bank. Danske Bank developed its processes, products, and advisory services to incorporate sustainability aspects since well before SFDR. So I look forward to hearing Erik's views on the EU Sustainable Finance Action Plan and the key challenges for asset managers. Erik, the floor is yours.
Thank you very much. And the purpose of this session, as Denise outlined, is to talk about the challenges and implications of SFDR. And what I will focus on is not so much the legal perspective, but rather the commercial and operational aspects of what we do. And also what we should also anticipate once we are past the implementation of these regulatory requirements. And I've chosen to structure the presentation in 3 parts. So first of all, I will talk a little bit about the EU Action Plan as a whole, because there are certain things about the EU Action Plan that needs to be understood also to be able to understand and assess certain implications. I will high level go through a key aspects in relation to SFDR, and here focus on the most critical aspects that also have the most implications for asset managers. And then I will go into specific details about specific challenges and also elaborate a little bit about what we in Danske have done in order to address those challenges. So if we start with the EU Action Plan, there are a few things which I think are important to understand and always be reminded of. So one is definitely around the objectives of the action plan, which is to reorient capital flows, which is to mainstream sustainability and risk management, and what is to foster transparency and long-termism. And this was identified in the EU Action Plan as being current weaknesses of the financial system. So what SFDR and other regulations together with also political initiatives is of course addressing these weaknesses. So it's not about building on something which is already good or great, but it's about closing those gaps. And in addition to that, it is also important to be aware of the fact that the EU Action Plan consists of multiple regulations, and all these regulations have the same goals, the same objectives, and many of them also address the same key actions, which also means that the effect of these regulations will be also much greater together than they would have been only in isolation. That's why we should also expect more impact compared to what could be the case with other regulations. Lastly, there are of course a lot of intra-dependencies also between the different regulations, which also means that these regulations in themselves or certain regulations might have limited direct implications, but together with other regulations or how they become addressed from a commercial perspective will then also create significant impact. So sustainability regulation, of course, has existed before. Why it's always important to ask the question, what is different this time? And now let's focus a little bit about SFDR and what SFDR or what the SFDR regulation would like to achieve. So first of all, it is of course the inclusion of social materiality and the focus on real world impact. Something which the asset management industry historically has not been as good at, where the focus has much more been on the financial materiality of sustainability aspects. It is of course also important to keep in mind that the purpose is to have this comprehensive European alignment. And this is something from existing regulations has been a little bit a challenge for the sustainability agenda, the fact that there's been different implementation in different countries, which has also meant that the force overall has been more weak. I think we should see this regulation as being more hard law than guidelines. That of course also limits the possibilities to implement the regulation in different way for different asset managers. This regulation is also very technical from a sustainability perspective, something we're also not used to, where sustainability regulation has more focus on technicality from a financial industry perspective rather than a sustainability perspective. And then lastly, what I think it's important is that this is a regulation which has significant commercial and investment management related implications, which are either direct or more indirect. So we have the EU Action Plan on Sustainable Finance, which is massive in nature. We have SFDR, where we also have certain aspects which we are not used to when it comes to sustainability regulation historically. So you all know the purpose of SFDR, which is about harmonizing ESG disclosures. This is of course something which is good for our customers. It will make it easier for them to assess the sustainability performance, the sustainability processes of their investment products and their investment management firms. It of course something which will make it easier for us as an asset manager to know exactly what is our obligations and requirements in relation to disclosures. As you all know, SFDR consists of multiple articles, and what is important to always be aware of is the fact that this is a transparency and a disclosure regulation. It is not as such a conduct regulation. So it outlines what we need to disclose and what we need to be transparent about, but in relation to what we actually should do, that is more up for us to elaborate on. I will come back a little bit to that aspect a little bit later in my presentation. Something that is also important to always be aware of when also listening to presentations about SFDR is this categorization of different investment products, where you have the Article 8 products, which are products which are promoting ENS characteristics, and then you have the Article 9 products, which have a sustainable investment objective. And I will refer to Article 8 products and Article 9 products also multiple times during my presentation. So when we then go into what are the key challenges and what are the implications from an operational and a commercial perspective. Well, this regulation, of course, outlines the disclosure requirements across multiple channels. So what we put into prospectuses, we need to have available on our websites, and we also need to include in periodic reporting. And this is something where existing regulation hasn't addressed that aspect, which of course means that we need to ensure that we are consistent in, for instance, what we report compared to what we put on websites, compared to what we put on prospectuses, meaning what we put on in prospectuses, that also outlines what we can market on our websites and what we can also report on. And this, of course, means there needs to be a strong connection between this, where what we then outline in the prospectuses and how we outline things will be extremely impactful from a commercial perspective. Historically, when we look at disclosure and marketing of sustainability aspects, most, if not all, communication has centered around entity level communication. This is what we in Danske Invest do. This is what we in this asset manager do when it comes to sustainability. Because of the introduction of this regulation, there's much higher requirements on the product level disclosures. And this is something which, with the exception of very niche investment products, has been a gap. This is something which as managers then need to address, where they need to take the entity level approach and then also understand how is this then applicable on different investment products. And that of course leads to important strategic considerations, such as what are different features which are consistent across different investment products, and what are the uniqueness of different investment products. Where of course, if you have products being too unique in nature, you might have more difficulties, for instance, in creating the reporting that needs to be done in the end. It might be more difficult to create scalable marketing and so on. And therefore, the focus that this regulation has on product level disclosures will be a complete game changer for the asset management industry. As managers, as a result of this regulation, need to be more specific in their sustainability implementation, narrative, marketing, and communication. And this is, of course, back to the fact that what we outline in the prospectuses, which we need to be very specific because of the nature of the annex questions, will also define the marketing and communication narrative and so on, which of course means that the degrees of freedom that exists in that part will be completely dependent on what we have written at an earlier stage. This is something where, as from an operational perspective, it will be important for us managers to ensure that there's a complete understanding across the entire value chain about these connections, and then also ensuring that whatever marketing and communication is done is always completely aligned with the disclosures that has been produced. We're seeing already today a lot of new products being developed and existing products that has been enhanced. And this is something where I think that most news and so on about new investment products we're seeing as a direct result of SFDR, where because of SFDR, the need to improve the sustainability performance of a product will be more evident because of the disclosure and reporting requirements. Because an investment product which down the road will have weak performance on principal adverse impacts, for instance, will be a less attractive product to investors. And this is what we're already now seeing an alignment towards in the market, even though that certain reporting obligations has not been entered into force yet. In addition to that, there is also a lot of new products being launched. I think that one reason is, of course, that the fact that there is a gap in relation to the availability of Article 9 products, where the demand from customers is probably larger than the current supply. So that is also something where much more focus has been taken by a lot of asset managers, also into strengthening the product development and also developing relevant and new products that will be commercially attractive in this new regulation. And there's been a lot of focus on the number of funds being categorized as Article 8 and Article 9, which a little bit tells me the fact that the regulation has been seen as a labeling regime, even though it is to be seen as a disclosure and a transparency regulation. And this is something where we could probably anticipate that, even though that in general in Europe there is a relatively low, or I would say around 20% of the funds are categorized as Article 8 and Article 9, but over time we probably will see this increasing quite substantially, where there are certain markets in Europe, such as Sweden, which has a very, very high portion of funds being categorized as minimum Article 8. In addition to that, Article 9 has also been seen by a lot of market participants as being a better product than an Article 8 product, where, as you know, that is not really the case, whereas Article 9 products are to be seen as different products with both the sustainable investment objective and the investment objective, rather than it is a better product than an Article 8 product, meaning an Article 9 product is of course then only suitable to certain types of customers. But I think that this trend will continue, and this trend will probably also continue in a way where it will be so that Article 8 will become some kind of minimum standard among customers, where the expectation is that most funds should be disclosed under Article 8. Yes, something which is also interesting with this regulation, where we can see implications on an investment management perspective, is of course the introduction of the disclosure requirements around the principal adverse impact and the taxonomy. And if you compare sustainability risks to these types of concepts, sustainability risk is of course a concept which is financially material but lacks a societal impact dimension, whereas principal adverse impacts and taxonomy is basically the definition of a negative societal impact and a positive. And what is of course important to understand from an investment management perspective is how will these criteria become financially material. And we are of the opinion that both principal adverse impacts, or these indicators, and the taxonomy will become financially material criteria, meaning because of the disclosure requirements, a portfolio manager will rather choose a company which have a low greenhouse gas emission than one which has high. And that will turn that into something which is financially material and will also impact investment performance. And that of course means that over time, investment funds with low principal adverse impacts and a high share of taxonomy alignment will, everything else the same, deliver better investment returns than those which do not. Something which also becomes a challenge because of these disclosure requirements is of course around data and data quality. And this is something which I talked about at the session last year, where I outlined a little bit the challenges around sustainability data as such. In Danske, we have spent a lot of time in assessing different data providers and the different underlying data, because it is something that will be important that we also choose the most relevant and the highest quality data also in our reporting. And of course, because corporate disclosures today are relatively weak, we will also report on aspects where the results will be very different depending on which data providers we choose. And this is just one example about two different data providers, and when looking into differences, for instance, in water emissions and which companies that have higher water emissions, where you can see that there are differences in which companies are identified. In the same way, there is also about taxonomy. But in addition to that, another issue with taxonomy is, of course, that it's extremely difficult to estimate. There are no real estimation models, which means that there will be short-term a very, very small portion of our investment portfolios that will be taxonomy aligned. And this will, of course, be a challenge in a sense that given that we need to report this to customers, they will, of course, then ask the question, how come my portfolio only has 1% taxonomy alignment? Or this was much lower than I anticipated. And that will be a communication challenge, which is important to be aware of. And in the same way, of course, back to the fact that taxonomy alignment is difficult to assess, you also have the same type of situation when it comes to taxonomy, where different companies can be assessed in different ways, dependent on what methodology and what processes the different data providers have for making the assessment. And this is something that will be the case until taxonomy reporting requirements has also entered into force for corporates, but it will also be an issue beyond that when investing into companies which are not under EU regulation concerning corporate reporting. Something that we have spent a lot of time in Danske working with is to develop relevant sustainability indicator to measure the attainment of DNS characteristics we are promoting, and also the sustainable investment objectives of our Article 9 funds. And this is something which requires a lot of considerations, both in relation to what are relevant metrics. Should the metrics be developed internally using own models, or should we rely on external indicators? Of course, when relying on external indicators, we also create dependencies to different ESG data providers, meaning that we become also much more dependent on those providers going forward. In addition to that, because these aspects will be reported on, because these aspects will be so visible in our value proposition, it is also extremely important to develop relevant indicators and models for our SFDR disclosures. And this is something where I think also over time we'll see much more advanced indicators being developed, and also these types of indicators also becoming a more prominent part of the sustainability value proposition of individual investment products. In Danske, we have also spent a lot of time in adjusting and developing our investment management infrastructure. And this is, of course, a disclosure regulation where there are certain things which in the infrastructure needs to be developed in relation to reporting aspects, but there are also aspects, of course, within our investment management processes that we want to develop also to also further strengthen processes around different concepts that are also important in the regulation. And therefore, we have spent time in working with, for instance, the indicators as I outlined, but also how should analytical tools also be developed also to address different key aspects. Another example of that is that we have, for instance, worked a lot with our voting guidelines also to address principal adverse impact, so that whenever we vote on different general meetings, we also have guidelines in relation to how to address aspects relating to biodiversity reporting or water emission reporting or other proposals relating to other topics related to the principal adverse impacts. And this is something which will be a continuous journey for asset managers, and also something that will be extremely important to capture value in the investment process and also promote the ENS characteristics that we've chosen to promote and the sustainable investment objectives that we're aiming to meet. Another thing which we have also, or there's also there's considerations that needs to be made about is, of course, around what monitoring that needs to be set up, because of the inclusion of more formalized promoted ENS characteristics, the inclusion of sustainable investment objectives, there also needs to be strong monitoring in place. And what is a little bit the beauty here is that in able to do that, it's possible to leverage existing monitoring processes, and in those processes also include sustainability aspects. And that is something that we have done, for instance, with the introduction of our sustainability risk challenger, where today portfolio managers in Danske Bank are challenged on the sustainability risks of their portfolio in the same way that they will be challenged about their investment returns or their investment risks. And this is also something which over time will be something that will be further formalized in the industry around different monitoring processes. And then this, as I outlined initially, is a disclosure regulation which connects what we write in the prospectuses to what we then put into the periodic reporting. And not being able to report on what is being outlined in the prospectuses is, of course, a key compliance risk. And in order to set up periodic reporting, there needs to be an infrastructure and processes being built in order to achieve that, where, of course, there is a lot of new data that needs to be integrated. If an asset manager decides to develop own indicators or own models, those models needs to be formalized, it needs to be validated, those data need to be produced, and that data needs to be integrated. This is also an area where it probably will be short-term a lot of manual processes, but over time needs to be more automatic because of the amount of work that would otherwise be needed to produce what then needs to be reported. And this is something which comes, of course, what reporting you need to put up comes as a result of what you have actually outlined in the prospectuses, meaning that the strategic considerations that you make about the prospectuses will then also define the boundaries and the requirements for the periodic reporting. So this was a few examples of the key challenges for asset managers when it comes to SFDR, but more from a commercial and operational perspective. And when I talk about SFDR, I always come back to this slide, which I think is a good slide about what was the intention of the EU action plan, which was basically to create systemic changes to the EU financial system. And that is something which I think is always important to keep in mind, because what we should expect as a result of not only the SFDR regulation, but other regulations within the EU action plan is, of course, that it will create significant implications to the financial system, which of course will then have commercial and operational implications, which we then need to address from an asset management perspective. So that was what I had on my agenda. Are there any questions?
Thank you, Eric. That was excellent. You really set out what is at stake and for asset managers, and in terms of what is needed to be dealt with, and obviously some of the challenges around that. I have a lot of questions, so I will ask them until we get some questions from the audience. But I do encourage the audience, please, to ask your questions. So maybe starting from the top. Do you think in terms of in the past, and I'm sure this is something that it was experienced at Danske, perhaps outside of Scandinavia, I don't know, but in the past, basically a financial return versus a non-financial return, social or environmental. Is there still work needed to be done at the level of asset managers to explain that, or even to justify, that to investors? Do you see that in terms of the distribution of your funds around the world?
Yes, so I think that this is an area where SFDR gives very good clarity, where if you think about the sustainability risk concept, which talks about what ESG aspects impact the value of investments. And that is something which is part of Article 6 requirements and something which impacts the risk-adjusted returns. When we talk about an Article 8 product, how I see it, an Article 8 product is about optimizing risk-adjusted return, but within that optimization, consider the negative impact and the positive impact of our investments, which would mean that everything else the same, if investing into an IT company would give the same risk-adjusted return as investing into an oil company, then you should always choose the IT company. So meaning that there you have the first aspect of double materiality. And this hasn't really been the case in the financial industry before, that you have made those considerations, because considerations historically has always been around the value of the investments. When it comes to Article 9, then of course you have to balance the investment returns with the societal impact. What becomes a little bit more philosophically difficult with Article 9 products is, of course, that an investment product which has very high impact as measured by the sustainable investment objective, but weak investment performance, would be a successful product. And this is an area where I think the asset management industry isn't used to that philosophical dilemma, and definitely would have difficulties in, for instance, then assessing the performance of such a product. And that is something which I think will be a key challenge for the asset management industry to solve for the next years. But to me, SFDR gives the answer about how investment returns versus societal impact or double materiality should be considered. And it's back to how have you defined your investment products? And that would be the guiding principle.
And I guess that also comes back to what you were talking about later when you were talking about developing relevant indicators, right, and metrics, because if you can actually explain, okay, financial performance, this is where it is or has been, but you have, done this in terms of this fund has done this in terms of the social objectives that we were very clear about up front. That should, as you say, that's not something that asset managers have had to do before, but that's why that stage is so important as well. But and then it kind of leads into my next question which is, and obviously, of course, there are two main categories of investors: institutional and retail, and I think also obviously given the amount of private capital that's needed to achieve all of the various sustainable development goals and the Paris Agreement and everything that needs to be done, if you will, we need as much investment as possible, and we need to, for instance, move retail investors' savings from the bank account where they're not really earning much to some, putting that money to use, right? And some of these goals. So I think that there's still though quite a lot of education required. And I refer to when you mentioned this impression that Article 9 funds are somehow better than Article 8, but they're just different. Right. One obviously is about sustainable investment, and the other is about the process, right? The integration of ESG and making investment analysis and decisions. So I think that's a tough one as well. And it is also tough as well because asset managers can be useful from the educational perspective, but of course, often are considered to be conflicted, right, in providing information. So I don't know if you have a comment about that one and how asset managers could assist with the educational process, which I think is pretty.
Yeah. So I think that it's a huge educational assignment that needs to be done by the industry about these different concepts, because sustainability, first of all, is very complex, and of course also the different definitions and so on is also something which has a lot of complexity. And there I think that it's like you have this, there's a lot of perception, for instance, that there is a one-to-one match between something being Article 9 and taxonomy aligned, which doesn't really exist. There is something around the fact that a sustainable investment objective can be a lot of different things. It's not just one thing. There is something around the fact that something being Article 8 actually tells you anything about the underlying processes. And I think that over time these things will be clear, but investments as such is complex, and sustainability in an investment context is even more complex. So I think that this is about being persistent, and then also acknowledging that a lot of education needs to be put into this, both internally but also externally.
You're right. It's also within an organization, an asset management organization itself, isn't it? And as you say, externally, as I imagine as well, including with the distribution network.
Yeah.
It's not just about the end investor. It's about ensuring that the distributors themselves understand those distinctions. We have a question here. Basically, it's sort of along similar lines a bit, but said in a different way. How can we avoid the Article 8 and 9 classification becoming a form of ESG label rather than just a disclosure standard as it is intended?
Yes, so I think that where we need to move towards what is relevant is the sustainability value proposition of a given product. So meaning that whether or not the product is Article 9 or not, that is actually irrelevant. What is the important question to ask is what is a sustainable investment objective, and how is that implemented in the investment strategy? And once you get past that, you will realize that there are those investment products which might target the SDGs, which will have strong processes. There are those which will target the SDGs that will have weaker processes. That is one aspect. Secondly, what will be important will, of course, to measure the attainment of the sustainable investment objective and the sustainability performance measured by whatever promoted characteristics are defined or these principal adverse impacts, which will then also be showing then also what is the outcome of the processes that you have. So meaning, does this product, for instance, have a better performance on the principal adverse impacts than the benchmark or other products or something like that. So it's about, to me, this is very much about moving away from focusing on the classification towards the value proposition and the outcome in relation to the data and the metrics being reported on. So I think that would be key, and I think also that over time, because both the fact that Article 8 would probably be a minimum requirement, but secondly also because people will get educated, then the questions will start about, yeah, but how are you actually promoting index characteristics? What have you actually, what positive, negative impact have you achieved within the limitations of the investment objective, or how well have you met the sustainable investment objective? And then that would be a completely different discussion.
Yeah, no, for sure. It's a complete change, isn't it? Because clearly the next step is the periodic reporting, and then asset managers will have to say, this is what we say. Then our prospectus is pre-marketing documentation, and this is what we did. Yeah. And that will be an interesting. It'll be interesting to see the results of that.
Yeah, and you could also, like, if you were to make it a little bit like harsh, you could say that what has been the historical approach has been saying that everyone has been extremely sustainable, and everyone has not had the obligation to actually report on that being the case, which would, you could say, it would be silly if like you would take the same approach when it comes to investment performance, saying that we have the best investment performance, but we'll never tell you what our investment performance actually is. And that is what this regulation will solve, and this will have huge implications because it will also show which ones have strong processes and where is it more marketing. And we will also be accountable to sustainability in a completely different way, which will also be extremely beneficial for this entire agenda.
Mm-hmm. Yes, and another way you could put it is there will be no place left to hide.
Yeah.
Which is true. Okay, thank you. I had a question about data. I mean, I know that in listening to some presentations recently, some of the challenges of asset managers have actually called for more raw data from some of the external providers. Is there more available? Are they starting to provide more, or?
Yeah, so there is a corporate disclosure issue, so that the data needed isn't disclosed by the companies. And then what we need to do is that we need to turn to the ESG data providers, who will in most cases make estimations based on different models. And this is of course something which has been acknowledged within the EU action plan. It's also something which is acknowledged in also a lot of the consultations. But it is something which unfortunately will not be completely solved until corporate disclosures has improved. And then you have the problem of investing into a European-based company versus a non-European-based company, where of course the anticipation is that this will become a global standard because of the need to get access to the European capital markets. But that's also something that will take time. But from our perspective, then of course it is extremely important to decide which to select. How do we use the data, and then also what implications would it be based on what data or what metrics we have also select for our investment management processes. So the data challenge, it's I would say it was prominent 1 year ago, 2 years ago. It's even more prominent now, but I think there's hope on the horizon because of regulation also addressing this, and also the fact that now regulators have decided to take a top-down approach, meaning top-down design what is a sustainable economic activity, or what is the negative impacts that our investments have on society. And that will, I think, make it easier from a from a data perspective.
I think that, thank you. I think that although timing is everything, isn't it? And I think with the corporate disclosure regulation, what is that, 2023, I guess, for the first tranche. So with the periodic reports happening first before that, it's going to be interesting to see what kind of, understanding there will be that some of the periodic reporting is maybe not as great as it will be eventually because, again, of the lack of data. So that will be.
Yeah, and also the fact that if one investment product has ISS data, another one has MSCI, even though that you have the same holdings, the results will be different, and that is something that will be difficult to communicate to investors.
Yes. Yes, I mean, one example I've seen is you have the UN Global Compact, principles 1 through 10, which should be, well, and as you say, if you get the data from one data provider versus another service provider, as you showed in your slide, you have different companies with issues. So that's a tough one to handle. Do you take the average? I don't know. I can't really
exactly.
average UN's Global Compact, I guess, but kind of on the data theme a little bit, you mentioned that in terms of the taxonomy itself, there's a lack of estimation models. But I guess there must be, I mean, are there some being developed? I suppose there are. And then I guess the question is, I suppose also there are some internal models being developed, perhaps because there's just nothing really available from an external perspective. What do you see kind of out in the market?
Yeah, so models for taxonomy eligibility are being developed. When it comes to taxonomy alignment, because of the fact that information needed is very company specific information, it is extremely difficult to estimate from an external perspective. And there I think no data provider will be able to solve that issue until company disclosures have been produced. Then of course, from a company perspective, it would be extremely difficult to set up these reporting processes because it's basically reporting on aspects which no one has historically been used to in many ways, not for all metrics, but for taxonomy especially, have not needed to do that before. So it will also take time, I think, until corporates also have sufficient strong processes for this as well.
I have one more question, but see, your presentation was so great. It raised lots of questions, which is absolutely the right thing, the right way to do it. So in terms of governance, you mentioned monitoring, but also in terms of governance, is the governance on the ESG strategy and process, is that being embedded generally with the investment analysis and decision-making process? Is it kind of a whole view, i.e. the financial and the ESG integration pieces, or is it looked at separately, or are we seeing different ways of handling the governance on the ESG strategy side?
Yeah, so I think it's about determining what are bottom-up processes, what are processes which portfolio managers are responsible for, and what are processes which are more top-down or managed, for instance, in Danske by our team, where there would be different governance processes around those aspects. In addition to that, there are also things which needs to be considered in relation to what should be regarded as hard limits, what are more soft limits, and this is very much dependent on like how you have defined your promoted characteristics, whether or not it's an Article 9 or Article 8 fund, where you will probably come to different conclusions on the basis of that. So I think that governance as such needs to be redefined because of SFDR, but also because of the fact that now sustainability aspects are being placed on the exact same level as financial aspects of the investment process, which of course also means that where historically you could argue that sustainability was something that was on the side, that is, for instance, impossible to argue for an Article 9 product today. So I think that most governance processes and setups has been and is being reconsidered as a result of this regulation.
Yes, and I think it also brings into what you were talking about earlier too, is that educational process even within the organization. It's so necessary as well, you know, to make that governance process work.
I agree.
Okay. I don't see any other questions. I took all the question time, but thank you so much, Eric, again. Oh, wait a minute. There's a question. If you don't mind, let's see. Let's see. Sec. I don't know, it's under the chat. I don't know if you can see that, Eric.
I can't unfortunately see it.
Okay, sorry. It says, can Article 8 and 9 products contain companies rated poorly on ESG today if their sustainability objectives are good? i.e., the 8 or 9 is driven by where companies and the fund are going rather than where they are today. So I guess that's about transition.
Yeah. So the answer is yes, and then you could say that for an Article 8 product, if you were to have companies that, for instance, perform not so good on sustainability aspects, that would be highly visible in the reporting. But besides that, that will not be an issue. When it comes to an Article 9 product, for instance, you could easily define a sustainable investment objective around transformation, where you would have a sustainable investment objective as investing into transitional companies, which would then mean that the investments as such would, the specific investment would be categorized as a sustainable investment according to SFDR. So I don't see an issue either or. Where it will be a little bit difficult will be, for instance, let's assume that you have a company which has a high taxonomy alignment, but has also significant negative impacts on society as measured by the principal adverse impacts. And that could, for instance, be a steel company or an oil company or a cement company in transformation, where the existing business is producing the negative impacts, but the investments into a sustainable future also creates this taxonomy alignment. I think those companies will be difficult to hold in a portfolio because customers will ask questions about those. But it all comes down to the fact that as long as it meets the do no significant harm criteria, and for Article 9, as long as it's within the sustainable investment objective, then that the investment would be completely fine.
Yeah, and back to your original point on Article 8, I mean, this is about the transition, isn't it? And this is what it's all about. Of course, we need impact, and we will be moving to more impact, hopefully, and more assets under management in impact strategies, as there are more companies doing positive things and creating impact. But
yeah, and you, I think, also
transition.
Agree, and I think a good example of such a product, it's the index products tracking the climate transition benchmark, where there you actually have an overlap towards, if you take the MSCI World benchmark, of around 97% or so. So meaning it's basically the same companies. But what is the difference is that companies which are not aligned to the Paris Climate Agreement, they would be underweight in that portfolio. But you still would have them. And such a product would be also Article 9 because it has a sustainable investment objective, meaning tracking a benchmark which is aligned to the Paris Climate Agreement.
Okay, well, thank you so much, Eric. It was fascinating and very informative, and really appreciate sharing your view of some of the best practices out there and the work that is needed. I think that's really a clear message too, is there's a lot of work still to undertake. So thank you again, and thanks to Danske Investment Management for hosting the session. Big thanks to the LuxFLAG team for making this happen. And I'd just like to end with a quote that I hope will resonate with everybody. And it certainly links to what you were just talking about, Eric. And we now understand that sustainable finance is not just another type of investment, it's a complete shift of mindset. So thank you again. Our next session will start at 3 o'clock, hosted by Deloitte, and focuses on ESG data, challenges and opportunities in the evolving landscape. So thank you again. Have a great afternoon. Bye-bye.
Super. Thank you.
Thank you.
Take care.